Great presentation, thanks Heather. Now the Aussies are taking over. We've got a fellow Australian who told me my jacket's the wrong colour. It should be silvery white palladium. Chalice Mining's next up. They've got the largest palladium nickel copper development project in the Western world, and for those of you that know, the ASX code is CHN. Alex Dorsch is their Managing Director and CEO, and he joined them in 2017 and was appointed Managing Director in November 18. And he's led Chalice through an exceptional growth period. He's got a lot of experience, diverse experience in a variety of leadership roles across the resources sector. He's been a management consultant, engineer, project manager, corporate advisor, and prior to joining Chalice, he was working as a specialist consultant with McKinsey's. He started as an engineer with BHP in Adelaide and then spent over 6 years as an engineer in oil and gas exploration. He's a proud dad to 3 little people, and the youngest is 10 months, so please give a very warm welcome to Alex Dorsch. Alex.
Thanks, Kerry. It's a lovely jacket, don't worry. Shout out to Rick Rule and the group for inviting me here for the first time. It's great to be here presenting to you and having some conversations around the conference. We are a relatively new name to this part of the world and this conference, so hopefully everyone learned something today about what we're up to in Western Australia. So as it says there, we have a very exciting new, globally significant critical minerals province in the western part of Western Australia. So why Chalice? Our 100% owned Gonneville project, as Kerry said, is the largest undeveloped palladium, nickel, copper development project in the Western world. It's a true Tier 1 scale resource. It's the approximately 17 million ounces of precious metals, almost 1 million tonnes of contained nickel, plus about 500,000 tonnes of contained copper in the ground. It's quite an extraordinary size discovery made by Chalice's geologists in 2020. So it's been one of the highest profile new discoveries in Australia over the last few years. We're currently in a pre-feasibility study. We're about a third of the way through that. We've also started the regulatory approvals permitting process for the project. We've also got, as it says there on the map, about a 1,200 kilometre stretch of the western part of the West Yilgarn Craton. So over 9,500 square kilometres of exploration licence. So a very, very extensive land package, and we've got a very large exploration team working that ground package as I speak. Just last week, we announced a strategic MOU, a Memorandum of Understanding with Mitsubishi Corporation, so the largest of the Japanese trading houses. We're now collaborating with them on the pre-feasibility study. They're a hugely successful foundation joint venture partner in development assets like this globally, particularly in the copper, metallurgical coal and iron ore space. So really fantastic to be working closely with them. We hope to work towards an asset level transaction over the next 12 months or so. So the intention there is that we will sell down a portion of the asset to Mitsubishi and they become the foundation joint venture partner. It's compelling value leverage. For those who know, palladium and nickel right now are very unloved commodities, so any real contrarians in the room, this will be very, very relevant to you. It's a very, very high level of leverage, our equity, to palladium prices, number one, but also nickel and copper prices. And we expect this to be a very, very competitive asset globally. We're in a very strong financial position, as it says there, about 70 million in cash in US dollar terms. So we're very well funded to get through to our investment decision on this project. We're an ASX 300 listed company. The last 12 months has been a challenging time for metals prices in our commodities. Our market cap reflects that, around 400 million US dollars today. Like I said, though, very strong balance sheet and very strong register, remarkably stable, supportive, long-term shareholders behind Chalice, including one of the most well-known entrepreneurs in Western Australia, Tim Goyder, who's been fortunate enough to make multiple world-class discoveries over the last 3 or 4 years. So why palladium? You might be saying, I'm not familiar with it, or what is this metal? So basically the story is simple. At the moment, battery electric vehicle adoption is stalling, and what's performing very strongly is hybrid electric vehicles. So plug-in hybrids or extended range EVs are really rapidly outgrowing pure battery electric vehicles. And why does that matter? Because palladium is used in the the catalytic converter in those vehicles. So any vehicle with a petrol engine has somewhere between 4 and 10 grams of palladium in that vehicle to reduce basically the emissions and keep emissions under control. So similar trends to what you see there on the right-hand side are taking place, and that consensus forecasts for palladium aren't really reflecting this change in demand and in terms of vehicle growth. So right now the world is in a bit of flux, and the data is definitely showing an emerging trend of hybrid growth over and above battery electric vehicle growth. On the supply side, it's very, very simple. Palladium is dominated by Russia and South Africa. So the BRICS countries, they are not Western allies. They are highly problematic jurisdictions, highly unreliable suppliers in terms of the mining industry, the metals industry. So basically we have a series of legacy assets that have been underinvested for a number of years. So there is a high level of supply risk associated with palladium. Over the last 5 years, on the right-hand side there, you can see a price chart. Well before the COVID pandemic, palladium price rose from about $1,000 an ounce to around about $3,000 an ounce. And then over the course of sort of some very tricky years, supply disruptions as well as the Ukraine invasion made the price very, very volatile. And what's happened over the last 12 months, as Rick Rule has pointed out, is it looks like Russia is just dumping into the market. So whatever they can sell, they are selling to support their economy, and that has cratered the price and has pushed the price well down into unsustainable territory. So being a stock very leveraged to this price, you have to ask yourself, is that a sustainable circumstance? We think very, very much not. And there's a huge amount of supply risk that the auto sector, being very, very dependent on these unreliable countries, are exposed to. The other key point is around recycling. There is a perception out there that recycled volumes will grow rapidly, but in reality, there is very little investment going into actual recycled capacity. So PGE prices currently, palladium and platinum, are deep into the cost curve. What that means is that roughly 40 to 50% of the world's palladium and platinum mines today are uneconomic. They are not producing free cash flow. They're not even covering their sustaining or stay-in-business capex. So you can see here there's a big chunk of operations on the right-hand side there that are needing to shut down and are overproducing, flooding the market with too much supply. That orange bar there is where we believe Gonneville will sit on that cost curve. So sandwiched between Russia on the left-hand side, which is a negative cash cost producer because of their byproduct credits, and predominantly South African mines on the right-hand side. And the key thing here as well is that South Africa is not a zero inflation environment right now. South African costs are escalating at somewhere between 8 and 20% per annum. So that is going to drive the price long term much, much higher than where it is today to sustain the market. So there is a level of panic going on in this industry right now, and a high degree of lack of discipline in South Africa. None of that is sustainable, so I guess that provides the opportunity for a contrarian investor. So what are we up to? That's certainly the market. So on our Gonneville project, I mentioned Tier 1 development partner now lined up in Mitsubishi Corporation. Our asset is just outside of Perth. It's about an hour and a half drive from a capital city of about approximately 2 million people. I mentioned that there is no shortage of metal in the ground here in this deposit. This is a sizable palladium, nickel, copper deposit. It's a competitive asset, as you saw with the cost profile on the cost curve. We expect it to sit firmly in the second quartile, right beside Norilsk. It's also a very low risk development location. There's a perceived high level of permitting risk to this asset given its proximity to Perth. Once you go out there and have a look at it, and everyone who does go out there and have a look at it comes back with the same message. This is very much a doable, executable project in terms of its location, and we are well on the way to achieving all the regulatory permits. It is shallow open pit mining. The resource here starts at surface, so that gives the benefit of having very low costs, which allow us to process very, very low grade material and therefore unlock a huge amount of metal over a very long period of time. This is not laterite nickel or any sort of difficult to process nickel. This is a classic orthomagmatic nickel copper PGE sulfide deposit. So we will produce separate copper PGE and nickel cobalt PGE products, as well as a PGE doré, similar to a gold operation in that regard. So very, very simple mineralogy, but a high degree of variability in the deposit. So that is really the crux of the work we're doing at the moment. The tier 1 scale resource, there's a table here which I don't expect you to read in this time, but to simplify it here, for the geologists in the room, there is a grade tonnage relationship. There is a very large quantity of low grade tonnes, and there is a subset, a very, very nice juicy subset within that very large low grade resource that's approximately 10% of the tonnes have about 2.5 times the average grade. So that the benefit of that is that we can target that higher grade resource early in the mine life and achieve a much, much higher, more robust margin during the payback period, because that material starts at surface. So we have approximately 4 million ounces in that category of high grade near surface, as well as 120,000 tonnes of nickel and 120,000 tonnes of copper. So that means two things. It's easy to get going because you target the high grade material, but it provides leverage as we go over time, and as commodity prices inevitably rise greater than the rate of inflation, that will give us tremendous leverage because we'll be able to scale up the operation and tackle lower and lower grade tonnage over time. So exactly what you see in porphyry copper operations in South America. As prices increase, the cut-off grade drops, and also we expect to see economies of scale. So as we get bigger, we also drive our unit cost down over time. This is what the deposit looks like, or the resource model looks like, looking at it from the side. Basically about 450 metres, or the top 450 metres is well and truly drilled out to indicated level. We've spent about $250 million on this project, drilling this out over the last 3.5 years. We've also drilled the mineralisation down to about 1,200 metres below surface. So this is an incredibly large scale resource, but an incredibly large mineral system as well. So you can see there the blue is basically inferred material that provides long-term optionality to the project beyond the open pit phase of the project. So the flow sheet, really this is the crux of the work we're doing at the moment. There is a high level of optionality in this type of mineralogy when you're dealing with 6 payable metals, multiple different products. So what's the crux of the pre-feasibility study we're doing is looking at a simpler starting process flow sheet, which is effectively a concentrator, a stock standard base metal nickel copper concentrator to produce a copper PGE concentrate. We will sell that with very good terms to a copper smelter. Also, we will produce a nickel PGE concentrate and sell that to a nickel smelter. And then, like I said, we will process the flotation tails to recover any palladium that was not recovered through the concentrator. Over the longer term, down the bottom right is a future option where we may go to do our own processing on the nickel. It's an area that a lot of nickel sulfide producers are looking at the moment, because there is just a very, very tight nickel smelting market. There are not a lot of nickel smelters around, and therefore you do lose a lot of value to the nickel smelter. So really, over the long term, we expect to be able to capture a lot of that value by doing our own processing and basically shortcutting the smelting space. So we'll go from nickel concentrate all the way through to a battery precursor product. Outside of, I guess, the project, as it says there, we've got 40 plus copper, gold, as well as nickel, copper, PGE targets outside of Gonneville. So whilst we do de-risk, do studies and permitting on Gonneville, we've got a huge amount of land outside and surrounding Gonneville that really hasn't been looked at before, primarily because we made the first discovery. So really, prior to us rocking up and drilling that first discovery hole, no one thought this was worth looking at in any manner or form. And now we're defining targets every week. We're defining a new copper target, a new gold target, a new nickel target. It's basically very, very wildcat type exploration, and the return on investment of those types of opportunities, as we've shown, is exceptional. We spent about $70,000 Australian to make the Gonneville discovery, and it's turned into a multi-billion-dollar type of opportunity. So the prize is very, very good on greenfield discovery, and we've got one of the best explorationists anywhere in the world leading that team of approximately 15 full-time geologists in the group. So a number of different project areas. I won't go through all of them, but basically going east of Gonneville, the discovery, some very, very good magmatic targets looking for nickel, copper, PGEs in that part of the world. As we go north of Gonneville, along the western edge of the Yilgarn, it's really looking like copper gold territory. And what makes us excited here is that Boddington, the largest gold mine in Australia, is just to the south of us. So we know there's evidence of intrusion-related copper gold mineralisation in this part of the world as well, but very, very poorly explored. So really going forward, really the catalysts here are simple. We've done a lot of work getting the asset to where it's at. We've obviously signed Mitsubishi now in an MOU. We're working towards an asset level transaction with them. We're really concentrating on the flow sheet and all the optimizations associated with the flow sheet, and that will lead to all the next round of mining optimizations and in the pre-feasibility study. We're about a year away from completing the pre-feasibility study, and then we will move into the pointy end of permitting, offtake, and financing of the project in parallel with a feasibility study. So importantly, we are fully funded to do all of this work, plus continue the regional exploration. So don't expect any shareholder dilution before we get to that investment decision to construct this project. So to summarise, I guess that what drives the value of Chalice's share price and the value of the company, really it is all about, at the moment, we're in a cyclical low in PGEs and nickel. So for the contrarians out there, like I said, you'll see that, you know, when you are deep in the cost curve, you've got uneconomic producers out there, that is typically a good time to look at that commodity, and we are one of the standout opportunities in nickel and PGEs. We can see that demand is strong by those hybrid electric sales. Those hybrids have palladium in the catalytic converter, but the financial market seems to think that the Russia dumping metal into the market is going to keep prices down. Let's see how that plays out. The test work we're doing as part of the PFS, like I said, that is the crux of our project. That is what drives value. So even a small 1 to 3 to 5% improvement in recoveries, those who know big, large projects, those can be incredibly impactful on valuation. We are looking at, like I said, that high grade early starter project to get the project going on the high grade, really selectively mine the resource to begin with, then tackle lower and lower grade over time. That's a study we're working on at the moment, and we'll update the market over the course of the next few months. And on top of that, really, it's growth. Everyone loves the sort of discovery investing. This is, I guess, the second leg of the Chalice growth story, could be another greenfield discovery in this region. We are certainly very, very excited about a number of targets we see in the West Yilgarn. It's an incredibly untouched, unloved area that we're really just doing all the bottom-up, first pass exploration on, and that's where sort of really the big discoveries typically come from. They come from places where people haven't really looked before, which what makes us very, very excited to continue that work. So that is Chalice Mining, and thanks very much. And I'm over at the booth if you want to come and find out more. Thanks very much.
We've actually got a couple of minutes here, so does anyone have any questions for Alex? I mean, this is I don't know if anyone picked up on it, but 17 million ounces of precious metals in the ground. That's absolutely enormous. Any questions? Yes, I do. Have we got a microphone at the back there that I can have? Thanks, guys.
Hi, Alex.
Hey, Carl.
How much cash do you have in the treasury at this point? And I notice you've cut back on your drilling program. And what is your burn rate right now?
So we've got about 70 million US in cash. We're looking to spend about 20 million in the coming 12 months. So the burn rate at the moment is around 2 million US a month. That a portion of that, approximately a quarter of that, is on the exploration effort. So we're not quite going at the same pace we were in the market of yesteryear. In the COVID period, we were spending sort of in the order of 15 to 20 million Australian dollars a year. Now we're spending about a third of that amount. It's really focused on really target generation. We feel the bang for the buck for our shareholders today is just keep feeding the pipeline, and then really those initial tests where you get that initial discovery hole. That's really where we can get the leverage on discovery. So that's the focus of the work.
So you're focusing on new targets, is that right?
That's exactly right. So we're not drilling anymore at Gonneville. Obviously, there's lots of resources defined there. It's a very high confidence resource. Like I said, down to the 450 metres down is all basically an indicated category. So that's enough drilling there for now, and we can progress the studies on that basis.
Okay, thanks.
Thanks, Carl.
Thank you. Question about supply of nickel. I know Indonesia and China seem to have kind of partnered together, and that's like a new closed market with Russian dumping supply on the market, keeping the prices low, and not many, little to no new mines coming online. How is that going to affect the future supply with demand? Because it seems like you and Centaurus are some of the few new nickel mines coming out that are outside that jurisdiction, outside those closed markets. So I'm just wondering what the future forecast is going to look like. And considering, I think those are like the dirty versus the clean sulfite nickel, and how do those two play into the nickel demand when it comes to like the pig steel versus the metals or the battery?
Yeah, no, it's a very good point. Obviously, nickel makes up roughly a quarter of our potential revenue stream, so we're obviously keep a close eye on the market. Look, fair to say the supply coming out of Indonesia is very elastic. China and Indonesia have the ability to add new supply very, very quickly, and they've demonstrated that. But they also need to see an incentive sort of price to do that. They're not going to expand unless they see an IRR, a suitable IRR on what is sort of multi-billion-dollar investment. So from a price perspective, that leads us to believe that nickel is probably going to be a bit more range-bound in the 15 to 20,000 range, just given sort of break-even costs in Indonesia are in the order of $12,000 to $15,000 a tonne. So that's our perspective on prices is probably greater than 20,000. You start to incentivise new Indonesian production, but less than 15,000, you really don't. You really start to put a world of pain into those Indonesian producers. I think the point around, is there a green premium for Western producers or higher ESG standard producers? I'd like to think so over long term, but what we're seeing at the moment is the customer is unwilling to pay for it. So it doesn't matter, what the supply chain and the producers and the various parties in the industry believe, if ultimately the end user and the consumer of a product is not willing to pay a premium for sustainably sourced materials which have gone into a product, then it's unrealistic to think that there's a green premium or a Western premium. That said, the IRA obviously has created effectively the mechanism for a Western premium. So we'll see how that evolves over time, and certainly what's happening is some of the Japanese, Korean parties are really out there at the moment actively sourcing Western nickel supply, because a market dominated by China and Indonesia is not a good thing for Western consumers or Western industry. So that's our view, I guess, on the ESG side of things. You know, we expect our project will have the highest level of sustainability metrics in terms of low carbon intensity. Obviously, Western Australia is a fantastically well-regulated, you know, very environmentally sound jurisdiction to operate in as well. So from that perspective, we think we'll have the advantage, but I'm not holding my breath for a premium on our products just yet. And perhaps the flip side to the point around Indonesian expansion is that has actually forced a lot of the sulfide nickel mines to shut down, which is actually now pushing the nickel smelters into a shortage or ullage situation. So actually, the terms we're getting at the moment on nickel concentrate and sulfide concentrate is actually improving over time. So a bit counterintuitively, but we are actually seeing advantages in sort of the squeeze on nickel at the moment in terms of our offtake terms we're getting offered.
Alex, I've just got one from the online audience. We can't forget we have an online audience there. And the question was, what is the planned throughput in the PFS study?
It's a range at this stage. It's a very good question. We looked in our scoping study or PFS at the larger end of the scale, upwards of 7.5 million tonne per annum to 30 million tonne per annum. Obviously, there's a huge amount of tonnes in the ground. There's a huge resource, 660 million tonnes of ultimately recoverable resource. The PFS is looking more in the range of 2 to 5 million tonnes per annum for a stage 1 project. So we expect that'll have a significantly lower capex, a higher margin, and a more robust project to survive through the commodity cycle. That's really the range we're assessing at the moment, but we will update the market as soon as we do have a more definitive answer on a tighter range to that.
Okay, final question.
Okay. 70 million's a pretty good chunk to have sitting around right now. Who are the big supporters that have been doing this project? Where'd you get that money from? And when was, just refresh my memory, when was the original, I mean, you guys had a big drill hole. I remember reading about it, but I don't remember when. How long you been working on it?
So the discovery hole was early 2020. Unfortunately, during the COVID period, where it was I guess probably didn't have the profile immediately like it should have. It was a tricky market, obviously, that first half of 2020. But from 2020 through to the early part of 2023, we raised 325 million Australian dollars, or call it sort of 230 million US dollars, through a number of financings between $1 a share and $7.30 per share Australian. So at the moment the stock is $1.30 a share. So it's been a tough sort of bottom out for metals prices and the company, but we've got the benefit of that we've financed very, very effectively and issued a very small amount of capital, very small amount of shares, I should say, through that period. So we have approximately 390 million shares on issue, trading today, like I said, around a $400 million US dollar market cap.
Ladies and gentlemen, could you please thank Alex Dorsch from Chalice Mining, all the way from Australia. Thanks, Alex.